Hello, my name is Bill Haley, and this is part of my introduction series into Haley2024 the movement. I have been doing a lot of 3-minute ones, but this is a lot to my tax principles. So, what are the tax principles that Haley2024 the movement relies on? First of all, you have to understand that I'm a very free enterprise type of guy. I believe that taxes, on the most part, are very harmful to society. Most things that government is currently doing should be done in the free enterprise system. So they still have to be paid for, but they should be direct fees for the services that you're getting. There's a lot of ways to get what we want to do and make sure government functions are still done, but still doing the free enterprise system and get the free enterprise benefits from it. So let's look at some of the principles that I have. Again, 10 minutes is probably going to be about length I'm going to do this. Government spending is a true tax. Milton Friedman said this first, or maybe not first, but most prominently. Government spending is a true tax. So if you are spending, let's say $7 trillion out of a $20 trillion economy, $7 trillion is a true tax. We might only collect $6 trillion. That's federal, state, and local. We might only collect $6 trillion, but we're spending $7 trillion. The true tax is not the $6 trillion that we collect. It's the $7 trillion that we spend, because we still have to take that other $1 trillion out of the economy, out of the assets, out of the capital base. When you take that out of the capital base, you're taking that away from other people that could borrow for starting a business, buying a house. You are increasing the interest rate. You are affecting the economy in a very major way by having that $1 trillion in debt. So that's a big one. Taxes should have a low flat rate with a minimum base amount. So not a lot of people who want to go with a flat tax, they say exempt the first $30,000. No, I say tax everything that from moment one all the way up, and there's a base. So let's say there's a base of $1,000, but you do 10% across the board. If you make less than $10,000, you still do that $1,000 base. Everybody has to contribute. What about the poorest of the poor? They put labor hours in the charity economy. I bring a charity economy into the mix. So you can do labor hours. So you don't actually have to come up with $1,000, but you put labor hours out there to do it, because you still have to contribute to protecting the country against foreign threats, doing the rule of law, having cops, and the court system and the like. Okay, let's keep on going. There should not be any tax deductions, exemptions, or credits. Highly, highly important. Each one of those things jack up the tax rate. If you exempt them, if you allow deductions, exemptions, or do a credit, by definition, you need to increase the tax rate to get the same amount of money. As you increase the tax rate, lower amount of money comes into lower economic activity happens, and lower amount you have coming in because lower number of taxable activity happens. Very important when we listen to lower taxable economic activity. Well, if you have, because the higher rates, people are less willing to do the taxable economic activity. Therefore, you're going to not have any taxes. Okay, let's keep on going over, because I'm going to keep on skipping ahead. Exemptions are only warranted if one forgoes the benefit or provision of a certain government program. So you see in some of my reforms that I'm going to say exclude somebody from this whole tax system because you're not getting the benefit. Education is a prime example of this. I want anybody not in the government public school system to be excluded from the education tax. That's not the same as a tax exemption, because you're not getting the benefit. If you take yourself out of the benefit, you did not go to the public school system. The government's not spending any money on your behalf within this. You exclude yourself from that. You're not exempting yourself from a certain dollar amount. You're not exempting yourself from a certain you don't get a credit, but there's a lot to that. But I think you understand. You exclude yourself from the whole thing because you do not get the benefit. It's a totally different thing than getting an exemption, but you still get the benefit. So that's an exception to the rule of no exemptions, because it is an exclusion from not getting the benefit. Okay, let's keep on going. I have a lot here. I'm not going to make my 10-minute limit, I see. A tax is an additional cost to the transaction being taxed. So important to understand that. You go to the store and they do a 10% sales tax. Well, a $10 item, you're paying $11. The store is only getting $10. Less economic activity is going to happen. If it was $10 and they got the old $10 and you spent only $10, more transactions, because as the supply and demand curve goes, the higher the price, the less number of economic activities you have there. Let's keep on going. Higher tax rates discourage trade. Obviously, if something costs $20, you're going to have less economic activities in that than if it costs $10. If it costs $100, you have even less. So the more something costs, the less somebody's willing to pay for it. Especially when the person getting the money only gets the base and not the taxable amount, because the government's getting that taxable amount. So if I were to pay $20, but the person I'm giving it to only gets 10, because 10 goes to the government, you're not going to get as many economic activity there. Okay, a mutually agreed on trade, by definition, benefits both sides of the trade, because they both agree to it. Thus, a discouraged trade does harm. That's highly important to understand. Okay, higher tax rates increase the under-the-counter or black market transactions. People doing it outside or hidden from the government authorities. Because if I can give somebody $10 for a $10 item instead of $20 for that $10 item, I have incentive to do that. He has incentive to do that. We want to keep it away from the authorities. It encourages it. Now, if it's only 5%, it's hard. You don't want to take that risk of getting caught off of 50 cents or just a little bit of taxes. But when it's a lot of taxes, you're more likely to do it under the counter, do it illegally. Okay, higher tax rates push transactions outside the taxing authority. So if Virginia does a tax, but you can go buy it in New Jersey, well, without that tax, now New Jersey might not be the best example, but let's say New Jersey doesn't have a tax on a certain item, but Virginia does. I'm more likely to buy it out of New Jersey than Virginia. Now, there'd be travel expenses and delivery charges, but let's see what happened during the Bill Clinton administration. The Democrats put a massive tax on yachts in America. So what did people do? They pushed the transactions, economic activity, over to Europe and other countries because they did not have that major tax. They can have their yachts over in Europe. A lot of activity stopped, and the boat makers, the yacht makers, really yelled at Congress saying, hey, we lost half of our business. It went over to Europe, it went over to South America, it went over to other places. And now we don't get any of the taxes because it's outside of our taxing authority. So, but that was legal, but it's not under the counter. It's tax avoidance, not tax aversion or tax. It's not the illegal type. It's the legal type. You avoid doing it within the jurisdiction. Okay, all taxes harm the poor the most. Boy, is that so true. You tax a rich person, but guess what? It's on the transaction from the rich person with the poor person. The poor person is asking the rich person to do services or provide a good. How many people are asking Jeff Bezos to supply them with product from Amazon? A lot of people. Millions upon tens of millions, hundreds of millions of people are asking Jeff Bezos, please serve me. That's what they're doing. When they go to the Amazon app and order something off Amazon, they're asking Jeff Bezos, please serve me. Then Jeff Bezos they hired a whole bunch of people to serve them. And they're asking Jeff Bezos because Jeff Bezos is doing it the best, most productive, most efficient way, instead of going down to the local store, where they did not do it the most efficient way, as by definition, the people asking for services. So if you tax Jeff Bezos a lot, he's going to have to increase his cost because the only place you can get that money is from the transaction with that poor person or with everybody, but especially the poor people. We're talking here, it harms the poor people the most. Okay, let's keep on going because I probably just talked about a ton of different things that I have coming up. Okay, consumers pay 100% of all business taxes. That's the only place that businesses can get the money. Consumers. A business starts off with, let's say, $0. They sell $1 million worth of product and they have to pay business taxes. They can only get from the consumers 100%. Now, do the business still pay taxes? Yes. It's a discouragement from all the taxes. It's a discouragement from the economic transaction. It adds to both sides of the ledger. Okay, the buyer and seller are both disadvantaged from the tax on the transaction. A business knows that if they price something at $10, they're going to get more sales than if they price it at $15. It's been known forever. $10 items, exact same product, versus $15 item, the exact same product. When you lower it down to $10, it increases the number of economic transactions, increases the number of items sold. You increase it to 15, you get lower amount. Businesses know they can't just increase their price at will. Otherwise, no businesses would ever go out of business if a business could just increase the sale price, and not lose economic transactions, not lose items being sold, services being sold. Because why would a business go out of business? They can just charge $1 million for a gallon of milk if price did not matter. Okay, let's keep on going. The Laffer Curve demonstrates how tax avoidance, as rates rise, affects tax collections. I'm not going to get into the Laffer Curve right now. That's a whole nother video. I love the Laffer Curve. It is undeniably true. If prices matter, the Laffer Curve matters. Prices matter. It's been known to everybody in every market. Okay, this is obviously going to go probably 20 minutes. Every 1% of GDP spent by government reduces GDP by over 1%, depending on the location on the Laffer Curve and how it is spent. There's so many factors that go into this. Can I say 1% and exactly 1%? No. But on average, yes. If you tax at 0, given that we're not going to be invaded by foreign companies, we still have rule of law and the like. If we tax at 0, then we're going to have the most economic activity. If we tax at 100%, we're going to have 0 economic activity, because who's going to want to buy something when 100% of it is turned over to the government? So why would they even charge you $10 for a gallon of milk if when they get that $10, they have to give it all to the government? They're not going to charge you anything. 1 penny? Why charge anything? Here's it for free. Because why charge anything if you're just going to give it to the government? So, at 100% taxation, no GDP happens. 0% GDP, 100% of economic activity happens. Again, given that we have rule of law and we can fight off foreign threats. That's why I put GDP, that's why I put taxes roughly at 10% and bring everything else into the free enterprise system. And even that 10% is dramatically in the free enterprise system. Okay, let's see. Let's keep on going because I could talk forever on the Laffer Curve by itself. And that is the Laffer Curve, that 1% and 1%. That's the average. Now, depending on where you are, that's going to change around dramatically, but that's the average going across the whole thing. It has to be 100% to 0% is 1%. And then it goes, that goes down that much too, from 100% of economic activities to 0% of economic activities. That's just straight up logic. and it's undeniable. But it's not 1% all the way across the whole thing. It depends on where you are on the Laffer curve. When you're at 80% on the Laffer curve versus 20% on the Laffer curve, it's a major difference. Okay. But look at the Laffer curve, and there's so many factors that are involved in that, but the average. Okay. High tax rates are more tolerated when there is greater need. When you're hungry, when you don't have shelter, when you don't have clothing, when your children don't have what they need, you're willing to go work for a long time, even at high tax rates, to supply them with their needs. Nobody wants to be hungry. You're willing to work a long time. So, people can withstand high tax rates, 50, 60, 70%, if they're really, really hungry. There's a lot to get into on that. I understand that aspect of it. But if government's supplying you everything, there's not so much need. This is when there's great need. When all your stuff is being taken care of for you, you're not willing to work for 80% taxation. Here, get paid $30 per hour, but we're going to take $24 and send it off to the government. You get $6 per hour. Well, people are willing to work for $30 an hour. They're not willing to work for $6 an hour very easily, because they're just not. They'd rather have that leisure hours. Okay, let's keep on going. I'm going way over time. Everyone, regardless of their income, should pay their share of taxes. Everybody should be contributing to helping the poor. Everybody should be contributing to police, courts, the prisons, and foreign policy and the military and the whole like. Everybody needs to have skin in the game. So let's keep on going. That's why I put a head tax of 10%. So whenever anything's done by proportional tax, like the sales tax, and some of the contracts for the police and the prisons and the courts and the like. Okay, a percentage of government spending to GDP is the true tax rate borne by everyone. We went over that with the Milton Friedman quote. That is the true tax rate borne, because even if government's only taking $6 trillion, they're spending $7 trillion. They have to take that part out of the economy, and they're controlling $7 trillion worth of labor hours out there. They're controlling that because they're spending $7 trillion, so they are controlling $7 trillion out of roughly $20 trillion. So maybe about 30%, 31, 32% of labor hours out there. Okay, let's keep on going. Regardless of whether a buyer or seller pays a tax, that means whether it's a sales tax or income tax, the tax is priced into the transaction. The role of prices ensures this happens. Competition ensures this happens. If we switch from a heavy income tax to a sales tax, the prices will go up. No, I'm sorry, the prices will come down, then the sales tax will be added to it, so it'll be roughly the same. So, let's say you have a 50% income tax, and you price things at $20, and you get $10. Then you switch over to a sales tax. Well, the price is going to naturally drop down to $10. The sales tax is going to be $10 because the equivalent of a 50% income tax is a 100% sales tax. It just is. Because I already talked about the income tax, $20 you charge, you get to keep 10, the government gets 10. On the other side, the price will drop down to $10 because you're not paying the income tax anymore. So you get the full $10, but you collect the $10 worth of sales tax. So the person buying the product, just like you're buying your labor, a company buys your labor. So they're paying you $20. 10 of it goes to the government. 10 goes to the person making the money. So it's an equivalent. Either way, the money comes out of that transaction. So it's priced into that transaction. One, you're not going to get as many economic activities items sold at $20 as 10. So that's priced in. And you're only getting 50% of that anyway. 50% is a pretty big number to make the point, but hey, a lot of rich people are making that right now. And that makes an effect. You have to pay that as a consumer. You have to pay both sides of that as a consumer. Okay, let's keep on going. Mandating people to take care of their responsibilities is better than government taxing and spending on that issue, thus taking that responsibility and control. Big time important. A big part of my reforms are government mandating that people take on the responsibility themselves inside the free enterprise system. So they're not going to be taxing for Social Security and then giving benefits anymore. They mandate that you have a certain amount of retirement funding built in your life. So they mandate that. So that you don't have to do both. You're not giving taxes for Social Security. You're just putting money into your own IRA, individual retirement account. And there probably won't be the tax designation IRA anymore anyway, a 401k and the like. There'll be different things because we go into a competitive regulatory agencies, competitive governing agencies. Anyway, stop going sidetracked on that one. Okay, but there's so much we're going to do there. From education, we switch over to mandating that you take care of this on your own versus government control, unless you want to keep government control with those taxes. But there's a lot more to it. The police, by forcing people to have a police contract, law enforcement contract, a court contract, a prison contract, you're taking care of those things on your own by taking that responsibility. So government does not have to tax you for that. That way, there's not a huge, you getting service for the fees that you do. Again, there's a lot of issues involved, some more mandates in some aspects, less mandates in other aspects of what sector you're talking about. Okay, let's keep on going. A percentage of government spending to GDP is a percentage of labor hours controlled by government. I mentioned that a minute ago. If they're doing $7 trillion off of, let's just say it's $21 trillion, make it numbers even, that's exactly 33%, 1/3 of labor hours being controlled by government. People who spend the money control the labor hours. Or at least they offer the money out there to control that labor hour. It's a two-sided agreement still, so it's not control, it is request, but that money is a strong request. Now people can deny that request and go make money other places, but when you throw that money around and once you accept that money, that's control. Okay, let's keep on going. Oh, I'm not going to get through this. I said 10 minutes. Wow, I'm already at 22. Okay, the poor often ask the rich to serve them by the rich person's product. I'm sorry, let me start again. The poor often ask the rich to serve them by buying the rich person's product and services. Thus, higher taxes on the rich require higher prices on the poor. I talked about that already at the beginning. I jumped the gun. But it's so important for you to understand. If a rich person, if the government's taking half of what they earn, the poor person has to pay the rich person double to serve them. There's no other places for the rich person to get the money to pay the taxes. If the rich person says, I want $10 in my pocket to give you this product, and the government's taking 50% of what the rich person is giving them, the poor person has to say, the rich person says, I want $10 in my pocket to enable you, in order for you to give $10 legally in my pocket, you have to give me $20, 10 for the government, 10 for me. So who's paying the taxes? The poor person. Because the poor person has to pay $20 for a $10 item. Very important. Now, I know a rich person is one of thousands of people who make a product. When you're talking about Bill Gates and when you're talking about any big company, there's a lot of people. But the rich person, there's a lot involved in that. I know it's more than just that rich person doing it, but you're still asking that rich person to give you. They're still taking that money, whether it's corporate taxes or the whatnot. The poor person pays that corporate tax. So when it was, I think it was 35 and it dropped down to 21 if I'm not mistaken. That 14% difference from the 35 to the 21, if I got my numbers right, the poor person got that benefit. By competition, the prices come down because the only place the corporation got that money to pay that tax is from the consumer. And poor people are part of the consumer base. Okay, sin taxes are imposed to discourage the buying of sin products, cigarettes, alcohol, and the like. Thus, the left is well aware of tax discouragement. So who are the ones that do the sin taxes the most? Mostly the left. The religious right does some of the sin taxes as well. I'm not going to deny that. And it works. Sin taxes work. It discourages some of the buying of sin products. Whether it's buying pornography, whether it's buying alcohol, tobacco, buying sugary drinks like Mayor Bloomberg did in New York City. By doing sin taxes to discourage high buying sin products, it works. It discourages it. You get less economic activity. So the left is very well aware that that works. So that we have to be aware of that. Okay, my last screen, and I went over this a little bit in another point way up there, but this is one of the mitigating factors. How for low tax proponents, I'm a low tax proponent. I want there to be as low as possible. So I gave a lot of reasons. I think 27 reasons within this. So. Some people will work more hours to overcome the tax because they need and want certain products and services, thus bringing in more tax revenue, more services to others, and more economic activity. I'm well aware. So let's say there's a 50% tax, and I want and need $50,000 in my pocket. I have to work enough hours to make $100,000. So I might have to work double the number of hours I would otherwise. Let's say I make, I forget the numbers right now, but let's say I make $50,000 in 30 hours a week. And if I go to 60 hours a week, I can do $100,000. If I really want $50,000 at 0% taxes, I can work 30 hours. If there's a 100% tax or a 50% income tax, equivalent to 100% sales tax, if I want that $50,000 in my pocket, I have to go all the way up to a 60 hours a week and make $100,000. I understand that. But your wants and desires and your needs get cut back when you have to put that many labor hours. You want to spend more time with your children, more time with your wife, more time outside the workforce. You might be a workaholic and you love it. That's fine too. But some people will work more hours. No doubt about it. That's a mitigating factor within this whole thing on low tax proponent. People might work more hours to get the wants and needs that they want. But that's mitigated by the 27 more negative things. So understand that. Okay. Everything's so easy to find. I went, my goodness, I underestimated this. I went 28 minutes when I said to start off with 10 minutes. Anyway, keep on looking around the website, but these are my tax principles to get where we want to move things to the free enterprise system. And it's about taxes, but it's also within the free enterprise system, things get done better because there's competition. A lot more efficiency, a lot more productivity, a lot more experimentation, a lot more people making choices, and the role of prices. There's so many benefits to the role of prices. So tax is only one part of it. The other part is the competition and role of prices. Anyway, keep on looking around the website. Thanks a lot.